Yo, 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 it's your boy Colin, aka Colin Trades CSP, back with you with another video. Last week we had a pretty interesting week when it comes to the overall market, as we really was mainly focusing on was Wednesday's FOMC. Everybody knew that we were going to get a pause when it comes to interest rates, but really the main audience was basically paying attention to the new Fed, Kevin Warsh, as he is the new Fed chairman, taking the reins over Jerome Powell. So everybody was paying attention to see how he is going to be speaking, reacting, and also to basically see if he's going to be a dove or a bear. Paying attention to that Fed speak, me personally, I do see more of a dovish tone, but people in the back, of course, when it comes to the dot plot that was being told about when it comes to his chairman, they were basically being a little bit more hawkish as they project more a hawkish tone going into 2027, as they think that we should be raising rates instead of lowering rates going into 2027. So that was my standpoint on that. But overall, when it comes to what I'm hearing from Kevin Warsh, he kind of does sound a little bit more bullish than bearish for the future tone, and what the future interest rates are going to look like. So that is a plus side. But overall, things have to be placed to basically see exactly where the market is going. So what I mean by that is that he is creating a team that will be paying attention to new live data, not future dated data that we are currently in the system for and what we use to project interest rates for the future. So he's going to be using a team to basically gather up live data of what they see for the market and allow us to basically make decisions that way for the future. So that is allowing for the markets to basically look kind of bullish long term, as the data currently showing is bullish overall. So it's a matter of, the question was why the market sold off Wednesday is why are the other Fed members basically being so hawkish, basically telling us, hey, we should be raising rates instead of lowering rates going into 2027. So that was definitely something to basically keep an eye on when it came to the new Fed. And of course, there's a lot of other details that were missed that in the Q&A that people didn't like that the new Fed did say. But overall, I think it's going to be a good and a long tenure for Kevin Warsh, and we'll see exactly if he can lead us to new all-time highs when it comes to the overall market and lower interest rates, as that is a very big key factor when it comes to the overall economy. You know, lowering interest rates will help when it comes to cheaper housing or cheaper monthly payments on housing and stuff like that. So less interest to be paid, allowing you to keep more money into your pockets. But that's when it comes to that. So again, sit back, relax. I'm gonna basically go down my weekly run through, see exactly what I want, what I see, what I don't see happening, and basically just give the economic news, go through the charts, give basically a little stock update on how the overall market is going, see exactly what's going up with the Iran deal, and go about that. So sit back, relax. If you guys enjoy this video, hit the like button and subscribe. Don't forget to hit the bell notification when it comes to getting notified when I post my weekly videos. And let's basically jump into starting with the economic data. So first, looking at the economic news, really Monday, nothing really going on, no event scheduled. Tuesday, the 23rd, U.S. flash manufacturing's PMI, U.S. flash services PMI, nothing really that crazy to pay attention to. New home sales, that's something to pay attention to, as again, this is a Fed decision making when it comes to how the overall housing market is going. So it's a good indicator for them to look at too. Fed Reserve Board release annual bank stress test results. Really nothing going on, especially 4 o'clock after the bell. Durable goods on Thursday, a little bit more, a little hectic to be paying attention to on Thursday. PCE, core PCE, consumer spending, personal income, weekly jobless claims, definitely going to be probably a slightly market mover when it comes to Thursday. And then Friday, finishing off with advanced economic indicator reports, wholesale inventories, retail inventories, and Michigan final consumer survey. When it comes to this week, really nothing serious to pay attention to other than Thursday, June 25th, but nothing really else other than that. Monday, Tuesday, Wednesday, it looks to be a nothing burger, going on to crazy movements when it comes to the overall market. And like I said before, we have the new Fed chair in place. So let's make sure that we give him a warm welcome and hopefully can give us some type of bullish news and kind of basically take the reins from Jerome Powell, being basically a market mover. Like I said before, when it comes to the new Fed chair, a lot of people thought he was a little bit bullish, or you could say dovish, when it comes to speaking, as he is using live data now moving forward to help basically push to see exactly where interest rates should be going. Now, exactly when he was speaking, the really bearish tone when it comes to the overall market selling off was the reason is that people in his Fed, chair, basically people were marking the dotted plots as we should be raising rates. No, when you're using the live current data, there's no tone and no reasoning to be raising rates. As you can see is that oil prices is coming down. The overall basically stance on, if oil prices do come down, that will allow for energy prices, a lot of things to start coming down. So then that would basically cause inflation to come down. So there has to be a reasoning why that the Fed people are wanting to raise rates with oil prices coming down, something that the overall market is not seeing that the Fed do see. Or again, they just want to raise rates to lower interest rates, or they just want to raise rates to basically lower inflation at a faster pace. But raising rates will cause an economic collapse as we have the highest credit card debts and so forth and stuff like that. So raising rates can cause an extreme collapse, but overall cause inflation to come down a lot faster, which then allow us to basically what they're trying to do is put the money printer back on, which then causing the basically steady the overall market if they do decide to raise rates. But again, that was a little bearish when it comes to the overall market, basically accepting that information as they want to raise rates and he wanting to keep rates the same. So that is that. Update on the Iran deal, really nothing going on as of moment. So when it came to Friday, they had a plan to go send JD Vance to Switzerland, which then that was canceled. And then over the weekend, come Saturday or Friday night going into Saturday, basically Iran came out saying the Strait of Hormuz is now officially closed, which then Trump saying, no, we are going to be opening that, which then Iran came out saying, oh, we're going to keep it open, but we're going to put a toll on every person who comes to the Strait of Hormuz, every vessel, you could say, coming to the Strait of Hormuz, which then Donald Trump said no to that as well, as it does not meet the agreement on what they currently are in place. So a lot of back and forth, shoving both waves. So really nothing going on. But at the end of the day, we are hoping that this deal gets done sooner rather than later, as if the Strait of Hormuz can be officially open, no more war being done. So allows for oil prices to come down. And again, if oil prices come down, meaning energy prices go down, and then which then transportation of goods and services can be cheaper, which then allows for the overall inflation data to come down, which then, like I said, when it comes to the Fed, makes the Fed's decision a lot easier to lower rates, and then the overall market can continue higher. So as you can see, it's a slow domino effect of everything, all it basically stirring in all eyes on this war. Once this is basically done and through, it allows for everything to start trickling down to then lower interest rates, and the overall market can push even higher. So again, pay attention to this. So going into the overall stock market now, as you can see, I'm going to start with oil. We had this huge daily downtrend breakout when it comes to the war getting started, and now we are retesting this trend line break. So let's see if we can push down back into the 60s. We do have a gap fill to fill at 68. So that is a little bit bullish when it comes to the overall market if oil prices can come down. And like I said, when it comes to our overall spending, as gas prices coming down allow us to pay for cheaper gas, more money into our pockets. So overall, when it comes to oil prices, let's see if this can come back to 68, 67, and the overall market can start to push even higher. Alrighty, now let's hop into the S&P 500. So as we saw Thursday, like basically Wednesday, Thursday, Friday, we had the huge major sell-off from the FOMC. We were able to fill the gap at 744. So now really all eyes will be on this 750 psychological level going into next week. We had a huge, nice hammer candle on the daily when it comes to Friday's close. So now going into Monday and Tuesday, I really want to keep an eye on this 750 psychological level. As you can see, we had resistance, support, broke through, wasn't able to test it. We did gap over, tested it, went long, but then FOMC shot us short. So now we're basically keeping an eye on this 750 psychological level to see exactly how we wish to react at this level. If we're able to push over this 750 psychological level, there's really nothing holding us back to then retesting all-time highs. 750 hold, which then will break to 756 and then retest all-time highs at 760 psychological, basically 760 all-time high push. If this does reject this 750 psychological level, then to be honest, I really wouldn't want to touch this unless we retest this 200 EMA at 728. If not, I really wouldn't touch this until we get to 720 psychological level that we basically haven't touched since this basically area over here back in May, early May. When it comes to the Qs, when tech is the front runner when it comes to this overall market, so they will be pushing most likely to all-time highs sooner rather than S&P 500. The 750 for SPY is this 735 psychological level for the Qs, as we've basically only tested this once, twice, 3 times, broke under, broke over. Now we retested it on Wednesday when it comes to the FOMC, and then Thursday now breaking over that 735, 750 on S&P. Now it's having a faster chance to break to all-time highs, as like I said, the tech sector is a little bit more of a front runner of this overall market. So really the only level I want to pay attention to when it comes to the Qs coming on Monday and Tuesday is this 745 area, as we had resistance, sort of resistance here, broke through, which then rejected at that 750 psychological area, came down. So eyes up on this 744, 745 area on Monday, Tuesday. If we're able to break over that area, then pay attention to the 750 psychological level, brand new all-time highs coming in on the Qs. When it comes to Bitcoin, as I could say, Bitcoin did react over the weekend when it comes to the overall news of the Hormuz being closed. So we did have that sell-off come into Friday. Now we're bouncing off this 60,000 area. Let's see if we can retest and push to these highs of that 67. So then we can break into this 70,000 area on BTC. As of right now, we're just in a basically higher low, like just from the downtrend, retest. Hopefully this downtrend or uptrend can continue to hold, break these highs for the continued stair-step move up. But if you start to zoom out, we're basically falling short. So on the daily time frame, we're getting lower highs, lower highs, lower highs. We need to push this and then start to push back into 78 and then 80,000 if we can basically start to say that this is a break of the downtrend, starting to move to the uptrend into a higher level and get back into the 90s. But as of right now, we're just in a clear downtrend. Let's see if we can basically start to stair step our way up to break this downtrend. Alrighty, perfect. Now I'm gonna speed run what I like to do at the end. I like to basically speed run the Mag 7 stocks, and now that SpaceX is part of this, I will do AMD and SpaceX added to this Mag 7 list. Just gonna speed run through this, give you my quick assumption of what I want to see come Monday and Tuesday, and basically game plan around that. So starting with AMD, not part of the Mag 7, but one I want to start with as this thing loads, 537. We did get a break into new all-time highs last week on, I believe it was Monday. Yep. So we had a new test of all-time highs, roughly around that 560. Was able to hold my support area at this 505, 500 psychological level. So as you can see, resistance, resistance, support, 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 resistance became support. So was able to hold this 505 psychological level. Let's see if we can get the continuation push back into this 560, which then make new all-time highs, which at 580 and then 600 psychological level. Next we have Tesla, massive, massive hammer candle on the daily. Let's see if we can get the push back. We did retest on Monday this uptrend break. So let's see if we can hopefully get over this. First test is this 510 to 512 psychological level. Let's see if we can get over that into 440 and then 450 to break this downtrend to then, or break this downtrend, get back into this uptrend to then push to all-time highs. So let's see if we can get 410, 410, and then to 440 and then 450. Meta's failing to get over these 600 area. We had this 600 test on Monday and Tuesday. Wasn't able to get a clean breakover, so then we followed when they came to the FOMC. Now we did shoot a nice hammer candle on Thursday. So let's see if we can get the continuation push into 600. If we can get that continuation to push into 600 coming into next week, then let's see if we can get that clean break to then break into this range that we have been in for a while to then 600 to 680. Amazon keeps rejecting this 250, 249 basically resistance area. As you can see, we've tested it multiple times. We did get a nice clean candle on Thursday. Let's see if we can retest this 249, 250, which then we want to basically retest this 255 psychological area. If we can hold this 255, let's see if we can get through the gap fill at 270 and then retest all-time highs roughly around that 278, 280 area. Apple, we did have a massive sell-off when it comes to WDC. Now let's see, we are holding this 288 previous all-time highs, as you can see. We are able to hold this 288, 287 area, and now slowly basically barcoding on the way up. Let's see if we can test this 305. If we're able to push higher, 305 is the first test, and then previous all-time highs at that 316, 317 area. Google, this was a very nice hold on this 350 area. As you can see, it was previous all-time highs, then became resistance, which then became support. Now we made a nasty hammer candle on the 350 area, slowly pushing to the upside. If we can just basically stair step our way up, we have some nice move to the upside to back into 400, which then once we get to 400, we can start to make new highs as breaking out to 473. But we're getting a nice squeeze, nice hammer candle, or nice MACD squeeze to the upside. Let's see if we can continue pushing into this 400 psychological level coming into this new trading week. Nvidia was able to hold this 196 area. Didn't get the full touch that I wanted, but bounced at the 200 psychological level. Now we're pushing back into this 210, 212 resistance. As you can see, resistance here, support here. Now we're at this resistance. We rejected it on Monday. Now let's see if we can get this push, clean break over that 212 to then test longs back into new all-time highs. So if we can get this MACD to squeeze to the upside, the overall trend can start to push to the upside, which then allows us to retest 230 and then 235 back into to new all-time highs at 240 plus. last of the Mag 7s, Microsoft. This one slowly just keeps dying. As you can see, since it broke out of this 440 psychological level, it literally just been rejected this 470 resistance, and then just continues to fall. Me personally, is probably one of the weaker ones of the Mag 7, but gave a nice little hammer candle on the Thursday, green candle. Let's see if we can get a nice push into this 400 psychological level. As you can see, major supports and resistance in the past. If we can get a nice push into 400, hopefully we can hold this to then push back into this nice area, 440, and then back into 470. But as of right now, weaker of the Mag 7s. So let's see if we can hopefully push off of this area, as we have some type of minor support at this 383. Hopefully we do not reject here and then come down to 350s. I mean, if it does, Microsoft is a very great company to own long term. Pays nicely. So, not a bad move when it comes to if we can push back from that 30% move from 360 all the way back into 470. So that is it when it comes to Microsoft. And lastly, SpaceX. I'm going to have to go into a shorter time here. When it came to SpaceX, I did mention in my chat that I wanted to see this push and hold. We did hold on Monday, this 175 area. We pushed up into 225, retested 175, and now completely holding over that 175. If we continue to hold, we're just basically going to base barcode from 175 with a top of 220 and then just range bound that for a bit. But as of right now, still really not a stock that I want to own for a while. So I'm just going to mark these levels, just kind of continue to trade these sideways actions until something basically gives. But as of right now, when it comes to SpaceX, 175 hopefully continues to be the floor, and the roof is 220. So that is it when it comes to the Mag 7s, and when it comes to the overall market outlook of what I see this coming week. Like I said, I'm kind of being in a bullish to neutral zone at the moment. As of right now, when it comes to the Iran deal, if that gets sealed, oil prices will come down, which then overall market and the inflation will come down. So that is a bullish tone going into the next coming weeks. So that is that. And then hopefully with the new Fed chair, this will be allowing for the new live data to give us some type of bullish to dovish news coming when it comes to lowering interest rates. So that is my current stance on the overall market. I hope you guys enjoyed that video. Don't, like I said before, hit the like, subscribe, and the bell notification when it comes to keeping up to date when it comes to my news. Follow me on social medias. I like to post when it comes to my own personal information on that, when it comes to personal data, when it comes to the overall market. But I hope you guys enjoyed this video. You guys have a great trading week this coming week. Like I always say, trade smart, trade safe, and make sure to don't stick too long in a market that you never know exactly where this can go, because this can completely turn to the negative with one simple data report. So like I say, trade smart, trade safe. Everyone have a good trading week, and I'll see you guys next week. Peace.